Hello Wolfpack, back into Bitcoin here today, and the first thing we want to talk about, as we usually do in every single video, is the fact that, well, this is a bearish formation on Bitcoin, as you guys would be well aware of by now. This is an ascending channel formation, contrasting this to the May to July formation. We had a descending channel formation with descending volume, which means less and less sellers were willing to sell as we reached lower and lower prices, which eventually led to a breakout. In this formation, we have the price rising, volumes descending, so less and less buyers are willing to buy as the price generally rises, which leads to a breakout to the downside, right? So very simple. It's literally the opposite of what we saw in May to July. So if you think May to July was bullish, which obviously it was because we jumped up from 30k all the way up to 69k, in the months that followed, then you should think that this is bearish. Let me say that again. If you think that this formation here in May to July was bullish, you should think by default, removing bias, that this formation here from January to April is bearish. And I don't want to hear about it being a long formation. It's taking a longer period of time to play out, that, we're seeing consistent higher highs, higher lows. People always say that. It's like, well, look at, May to July. We saw, lower lows. We saw and lower lows and lower highs, and we let that break out to the upside, right? So just because we're seeing higher highs and higher lows doesn't mean we're going to go up, right? Just like in May to July, we saw lower lows and lower highs, doesn't mean we went down, right? We went upwards, and so the opposite can happen this time for sure. In fact, it's likely to happen. So I will repeat that again because I think it's a very important point that I haven't really touched base on too much. If you think that this formation here was bullish, which it played out to the upside, you should think that this formation here is bearish by the same logic, right? It's the same logical pathway. You're just applying it and removing your personal bias. So yeah, I don't think my market is bullish right now. And my prediction has stayed the same since up here in this region in November, around 63k. I have said the whole time that we're going to be going downwards, most likely, on Bitcoin towards the 200-week SMA. If we're looking at something like this chart here, we can bring up the 200-week SMA. It is this green line. You can see that every time we lose the 50-week, we end up at the 200. We've spent 15 months at the 200-week SMA in total over the Bitcoin's lifespan. And so to say that it can't happen again is ridiculous because we've been there for 15 months in the lifespan of Bitcoin. So yeah, it could happen again. Where would that be? 24k on Bitcoin, right? That's what we're looking at. 24k on Bitcoin at the latest, probably December to November this year, at the earliest, even as early as, June. But the thing is, I'm kind of pushing for that November to December low. That's where I think it's most likely. But again, it's any time before that we're looking at. So look, Bitcoin not looking good. Very simple, right? If you want to break down the whole video to a very critical component, that's the component you want to break it down to. Market patterns: descending channel, bullish; ascending channel, bearish. Before we get even further into the video, in which we're going to look at the 4-hourly chart and a bit of the weekly chart as well, try to determine the next short-term move and also the long-term move. Let's look at a bit of a sponsored video here from BitGet. Now, before I get into it, it's a sponsored video, but I want to say for sure that BitGet is genuinely one of my favorite exchanges. Why? Because I'm Australian, and in Australia, you can't really trade leverage or futures on any of the major exchanges, including Binance. So BitGet allows me to do that. BitGet also is safe from regulation, but you'll hear all about that in a second. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box and you will receive up to 153 USD deposited into your account as a reward. Now, jumping further into the daily chart, what we can see, minus volume and all of this stuff here, is that the Stochastic Rsi is moving up quite rapidly into overvalued territory. Historically, this, Stochastic Rsi is obviously very inaccurate, but generally speaking, it has provided a pretty good indication of where the tops are for Bitcoin, okay? And if you just pause the video and look at this chart here, you can see local tops, it's been pretty accurate with, especially looking at something like the weekly chart. We'll look at it in a second. MACD is coming in for a bullish MACD cross at this point, and some would say that's very bullish. However, what we do generally see before a MACD cross, especially in bearish, in the bearish side of the histogram, right? So in the negative side of the histogram, which we are in now, right? Because the center line of the MACD's over this point here, and we're underneath that at this point. Histogram's still red. What we generally see when we see that kind of reversal start to happen is a high probability of that flattening out. And what happens there is that, generally speaking, when we come in for a MACD cross, that represents that the market is in a point of contention, hasn't made a decision yet. And if we're not ready to make that decision, we will jump down and this MACD will continue downwards. So that hasn't proved anything until it's played out, and it hasn't played out yet, right? And we'll look at the weekly chart more and you can understand that a bit better in a second. But The RSI not really showing us too much value at this point, and so for that reason, we're just going to be putting it away. But ultimately, what we're looking at for Bitcoin right now is the potential for Bitcoin to jump even higher, right? Do I think it's going to happen? Well, let's answer that question. What we're looking at for Bitcoin right now is a 75 SMA. We're looking at the bull market support band, which is trending downwards towards the current prices. We're looking at the Gaussian channel, and we are looking at the 50 SMA. All of these things that I've just brought up here, the 50, the 75, the Gaussian channel, and the bull market support band. And if we want to add one more thing, the center line of the Bollinger Bands, all of these things, right, are within 41,700 and 42,600. Okay, so we have 1, 2, 3, 4, 5 major. These are big resistances in the same 1,000 USD price region. The chances of Bitcoin breaking above that are low, right? Inherently, just by default, they are low, right? And anyone who tells you otherwise is not looking at the chart. They're low. Doesn't mean it can't happen. Of course, it can happen, right? And if it does happen, and we look at the 4-hour chart, if it does happen, we will see a swing upwards to this downtrending dashed line, okay? And then from that point, we can come back down and try and retest some of those regions there and then potentially head back upwards, right? If it does happen. Now, the point is, it probably, I don't want to make a prediction here, but it probably won't happen. Now, it's very hard to tell. Why is that? Well, the 4-hourly chart actually saw a fake out below the channel formation and jump back up. When you see that, you generally see upside continuation. And we also saw a descending wedge formation that recently broke to the down upside, and that targeted move is going to take us right towards that dashed line, right? So there is evidence to suggest that it will break up further to around 45k to 44.5k. There is the evidence there. However, it's very hard to make a prediction because we just simply aren't over the line yet. Now, if we were at 42.5k right now, I could make a prediction very easily, and I could say, hey, we're at 42.5k, very easily going to be swinging upwards to 45k, right? That's a very simple prediction to make. But at this point, we can't make that prediction because we simply haven't jumped over resistance. So I'm not going to make any predictions here. What I'm going to make is an observation, right? So don't hold me to it. The observation is there is a lot of overhead resistance on Bitcoin up to 42.5k. A massive amount of overhead resistance there, right? Whether we break that or not will be telling of the next move. If we break it, we will move further up. If we don't break it, it's very clear that we're going to be, sooner or later at least, heading downwards towards this lower uptrending dotted support line. Okay, very simple kind of assumptions to make there on Bitcoin. So I'm not making any short-term predictions because I don't believe in the short-term prediction right now. It's too hard to make. There simply is no clear, direction for Bitcoin. What I can say, there's a massive amount of resistance within the next 1,000 USD upwards, massive amount, and it's quite likely, based off TA, that we will reject from that zone. So let's see what happens, right? But if we're moving on to a different chart, like the 4-year cycle theory and the weekly chart, what we can see is the macro trend is quite clear. Okay, so short term, a little bit iffy, who really knows? But the macro kind of tells you that, hey, it doesn't really matter what happens in the short term because this is what the longer term trend is saying. And I speak about this every video. And that 4-year cycle chart essentially is telling you that, and if you pause the video and look at all these correlations that are going on here, it's essentially telling you that the November top was the true top, right? The true top did come in November, and it's essentially telling you that the true bottom should be coming at 24k around November to December or potentially before. And it's essentially telling you as well that after that, an all-time high should be happening on Bitcoin in August to September next year, right? Those are all long-term assumptions, all of which are probably not going to be super accurate, but the point is it's an indication of what's going to happen next. Now, when considering macro, we also have to consider the macro environment. While we're talking about macro trends, we need to talk about the macro environment. The macro environment is bearish right now. DXY is pumping massively. DXY is heavily negatively correlated or reverse correlated to Bitcoin. It's pumping like never seen before, really. I mean, not for a long time at least. And what we're seeing is a macro double bottom formation here, and that would target all the way up here to 110 USD, right? At least. And so that's not good. And then we're looking at bond yields, and we're looking at the interest rate hike that will be happening on the 5th of May, will most likely interest rate hike. And we're looking at the Federal Reserve telling us that that's going to be 50 basis points, right? The higher these interest rates go, the more likely there's going to be a recession. The less spending power the average day person has, the less spending power they have to spend on consumer products, the lower the stock valuations come, right? And the more companies sell their stocks in preparation. And institutions, this is what we saw in Netflix, right? All we need to do is go on the Netflix chart right now. We can see that happening already. Right, so this is the Netflix chart, the one-day chart on Netflix, right? This stock went all the way down from November 17th, which was the high at 700 USD, all the way down here to around 330 USD, right? We've recently had a very bearish daily candle close for that stock, and This is a great indication of what's to come in the future, essentially. Institutions selling off a massive amount of stocks. Do you think this was retail driven? No, it certainly was not. And what you can notice as well is this topped out at the same time as the S&P topped out, and it topped out at the same time as bond yields started skyrocketing, which means that it's all connected to the interest rates decisions that are going to be happening in the, towards the later part of this year and also, next month. Right. The point is, these institutions, these companies, and these quite oftentimes the same institutions who are buying Bitcoin, right, are very bearish on traditional markets right now, very bearish on the financial markets right now. And they're selling their assets. They're not buying assets, they're selling assets. And so right now it's the time, it's already been the time for months to be de-risking rather than taking on excessive risk, because we do not know how Bitcoin is going to react to a recession, right? And all the indications are pointing to the fact that there will be a recession in 2022. So we need to be very cautious in the macro scale. And so when we're tying that back into Bitcoin, we're tying that back into cryptocurrency, the whole question is, well, will Bitcoin depeg from traditional markets, or will Bitcoin continue trending with the traditional markets, right? If it continues trending with traditional markets, it's going to go down. That's a fact. But we simply don't know the answer 100%. So when we're looking at something like the weekly chart again and looking at a different, perspective here, and this is kind of, speaking about a more imminent crash, right, that could potentially be happening. Again, it's not my prediction. It's just an observation that I've made over the past few days, I should say. We're looking at a kind of a trend that's going on here for 75-week, the 50-week, and the 200-week. What you'll notice is that on the last two macro lows in 2015 and 2018, when we tested, on the very day we tested the 200-week SMA for the first time, the 50-week had just crossed under the 75-week, right? Will it happen again? If it does happen again, that would mean that Bitcoin is going to be crashing in about 1 to 2 weeks' time, right? I don't think that's going to happen. I think that's cutting a bit close, right? I don't think we're going to drop, I don't think we're going to drop 15K in 2 weeks. I simply just don't think that's possible, like logistically and technically possible. However, it is by no means a bullish trend, right? It's by no means a bullish trend. And it's just another one of those little pieces of information that make you exercise caution. So ultimately, to kind of evaluate, and what I've been saying for the past few videos essentially is that short term, it doesn't really matter, right? Unless we break, and I'll tell you this right now, unless we break, let me shut off all these indicators, the 200-day SMA in the short term, unless we break that, right, it does not matter what Bitcoin does. The macro trend is downwards. If we get above 48K, again, 48K, we can talk about this. But at this point, the macro trend is still downwards and everything is still bearish for Bitcoin. Before I end the video, I want to talk about the Crypto Academy. If you want to learn how to trade, if you want to learn how to analyze charts in a similar fashion to myself, me and my friend Mega Well Crypto, analyst Mega Well Crypto, developed this course, 10-unit course. It's releasing on May 16th, but you can pre-order it now for a lower price. Go to the website in the description below and you can find out the link there. And you can email us at cryptoacademycourses@gmail.com to understand the payment information, the payment amount, and also an in-depth course structure. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one. Cheers.